I now hand the conference over to Mr. Saurabh Chawla for the opening remarks. Thank you, and over to you, sir.
Thank you, and good morning to everybody. Welcome you all to the annual results call for fiscal year 20. I hope everybody is safe, their families are safe, and I pray that everybody remains safe. It is indeed a challenging time for our country and the world given this unprecedented COVID pandemic conditions. And as you know, the government of India enforced lockdown from March 2020, which got extended to June 2020 to control these conditions. The lockdown had an adverse impact on the good businesses, airports, energy, and highways. However, the good news is that the businesses are all on a recovery path. Let me brief you on how our business is adapting and realigning to the current conditions. To start with, on the airport side, restrictions on operations of domestic flights were lifted on May 25th, 2020. Airports were closed from March 25th to May 24th, 2020, except for cargo and evacuation flights for passengers. Scheduled commercial international flights continue to be suspended till further notice. However, some of the key developments which have had a positive impact on our business in these troubled times, which right now it's coming back to life. One, the Vande Bharat mission, which the government of India started early May 2020, will evacuate many of the citizens stuck across the world. This has played a significant role to bringing the airports back to life. The key and very recently announced the establishment of bodies. This Ministry of Civil Aviation has established bilateral air borders between US, France, Germany, and India on July 16th. Air borders are arrangements between two countries aimed at restarting commercial passenger services. Air borders are expected to come in the near term. Thirdly, we see now an option of tests on arrival of embarkation getting started across international airports. International airports like Heathrow have initiated COVID-19 test on arrival of pre-embarkations based on new testing technology which actually give results in 20 minutes with 98% accuracy. For passengers, this will provide solution for safe travel. I don't know if you've noticed, today's newspaper also talks about India-Israel initiative, and they're testing this in Delhi, where a test can be provided in few seconds and very highly accuracy. These initiatives will actually help open up airports in the very near future. A very interesting technology that has also been tested is so for driving as you have test analyzers, that technology has also been tested in Israel, has already been applied to the FDA for approval. And all these technologies will ensure that we bring the confidence level back to the cluster that he is traveling safe. Having said this, I would still like to reiterate that actually aviation or air travel is the safest form of travel. It has very, very low risk of transmission. It's been observed through various studies and compared to other mediums of transport. And the reason behind this is that cabin air is actually refreshed every 2 minutes. It's a mixture of both fresh air and also internal air, which is filled with filters. Second is very disciplined way of maintaining and hygienic conditions within the aircraft and airport.
Mr. Chawla, this is a conference operator. I'm so sorry to interrupt. Sir, we just noticed the audio is not very clear. Allow me a few seconds. I will just reconnect you, sir. Requesting all the participants to please stay connected. We are just trying to reconnect Mr. Chawla. Requesting you all to please stay online. Please do not disconnect your lines while we have the line reconnect for Mr. Chawla. Requesting all the participants connected for the GMR call. Please stay online. We will just try to reconnect the chairperson back to the conference. Thank you. Ladies and gentlemen, thank you for patiently holding the line. We have the line for Mr. Chawla reconnected. Over to you, sir.
I don't know where I left, but basically I was alluding to the fact that air travel is the safest form of travel. And as customers, as flyers gather confidence based on various technologies and processes that are adopted by the airport operators and by the airlines, we will see this sector come back much faster than all the kind of analysis that is being seen in the public space till now. So in summary, what I would say is that airports are back on a recovery path post the lockdown, and this is being currently primarily led by the domestic traffic. Coming to specific airports, I'll talk about the Delhi airport. Delhi airport daily average, which was recording at about 13% of pre-COVID levels in the first week of reopening, has now improved to about 17% in the ninth week, whereas domestic average ATMs, which were at about 24% in the first week, have now improved to about 28% in the ninth week. As a matter of fact, yesterday, both in Delhi and Hyderabad actually received the new highs post the COVID crisis. International traffic passengers and ATMs have improved from about 14% and 19% of pre-COVID to about from a pre-COVID level of about 3 to 5%. On the other hand, the cargo domestic daily average, which was at about 17% of pre-COVID levels for the first week, has improved to 41% during the ninth week. Cargo international daily average tonnage, which was at about 48% of pre-COVID levels for the first week, has improved to 78% during the ninth week, and this is for Delhi airport. In Hyderabad, the Hyderabad domestic daily average passenger flow which was at about 8% of pre-COVID levels for the first week, has now improved to 24% in the ninth week. And the daily average ATMs are now at about 33% from about 11% in the first week. Cargo domestic daily average tonnage improved from about 8% of pre-COVID levels in the first week to 54% in the ninth week. So overall, the whole business is coming back to life. And as technologies and innovations around us continue to improve and as they get adopted, we believe and we anticipate strong recovery in the air traffic back to within fiscal year 21, back to the pre-COVID levels. Mind you that government till now actually has only allowed 33% capacity, domestic capacity for airlines. Very recently they have increased it to 45%. So as airlines also gear up and as passengers gain confidence, capacities will be further open, and that will bring business back to the airports. On the energy business, which falls under essential services, as notified by Ministry of Power, they continue to supply power even during lockdown, but now it is also seeing positive traction. PLF at both our Varora and Kamalanga plants, which were at 49% and 52% during April 2020, have now improved to 82% and 69% in July 2020. Good news is that also on providing liquidity by the government. As you know, the sector suffers from a lot of overdue receivables from the DISCOMs. So the government has taken some positive actions towards that, and hopefully, as receivables levels go down, the overall health of the energy sector will improve. The Ministry of Coal has also accepted Usance Letter of Credit as a payment mechanism. That is also very helpful from the supply of coal to the power plants. Additionally, we believe that about 900 billion rupees of liquidity is going to be injected for DISCOMs, and the government will also help in expediting the recovery of the receivables. On the highway business, we are seeing momentum back. Hyderabad, Vijayawada and Ambala Chandigarh expressways recorded 85% and 75% traffic as compared to pre-COVID levels in July 2020. Revenues in the remaining two projects are not impacted as they are annuity projects. I would also like to take this opportunity to share some positive news on the highway business. We have made significant progress on the arbitration claim settlements respect to our key road projects, Hyderabad-Vijayawada and Chennai ORR. We expect the award to materialize in the future. GMR as a group is continuously adapting to the situation and focused on following measures to mitigate the challenges posed by the COVID conditions. And the key one is cash conservation. We are conserving cash very aggressively. We have rescheduled our capex plan. We have trashed down our operating expenses. We are consolidating our infrastructure, especially in airports, to reduce operating costs. For example, in Delhi, we have closed Terminal 1 and Terminal 2 and are operating both domestic and international flights from Terminal 3. We are reviewing our budgets very ruthlessly and reducing operating costs substantially. But this is not at the compromising to compromise on the security and safety of investors. So we continue to actually invest in new technologies and new processes to actually bring much better standards of hygiene at our facilities. During the first quarter of fiscal 21, we also achieved a major feat of our strategic partnership with Group ADP. As you are aware, we have successfully completed the strategic partnership with Group ADP, even an unprecedented time of COVID-19 pandemic. Everybody, most of the capital market players were expecting that this deal may not go through, but thanks to our partners and their firm commitment and their belief in GMR, this transaction really got completed. We have received the first tranche in February 26 for an effective ownership of 24.99%, and recently we got the second tranche for the investment of the balance 24.01% of GAL. The second tranche of INR 4,565 includes 1,000 crores of primary equity infusion in the platform airport, which is GAL, which is on July 7th. Given that the airports are all shut across the world, it was commercially agreed that it is prudent to defer some part of the proceeds of the transaction in the form of an earnout. So it's more like a deferred payment. So about 1,000 odd crores was deferred, and they were deferred up to between 2022 to 2024, and basically they are pegged into kind of earlier earnouts, which are now total about 5,535 odd crores. So over the next 3 to 4 years, we are expected to receive substantial amounts of money through the achievement of these earnouts. Post the second tranche of completion, now Group ADP owns 49% in GMR Airports. As part of the terms of the transaction, GMR retains management control over the airport business. The proceeds from the strategic partnership have been primarily used in servicing the debt and purchase of private equity investors in GAL. The infusion of cash will help further deleverage the group and result in improved cash flows and profitability over the medium term. Completion of the transaction is now leading us to our next step. We had alluded in April of 2019 that we would like to create pure play businesses, especially the airport business, and put it into a different vertical, and hence we are looking towards a mirror demerger of the airport business from the rest of the business. In the recently concluded board meeting, we presented various options to the committee of the board. The board has asked us to look at many other possibilities on which the management will work and go back to the board for their evaluation and recommendation. Two structures are being evaluated. One structure is where it's a mirror demerger, which results in two entities, airport and non-airport. Another structure has been also evaluated, which actually converts into three different entities, which is airport, energy, and highways. So basically create pure plays, which gives a lot of flexibility to not only to raise capital for deleveraging, but also to even get strategic players to participate in that. The key, as I said earlier, the key criteria for demerger would be for creation of the pure plays, thereby attracting investors or strategic players. We are on the right path, of course, to build our airport portfolio in partnership with ADP. Recently, we signed the concession agreement for the development and operations of the Greenfield International Airport at Bhogapuram, Andhra Pradesh, with the government of Andhra Pradesh. The concession period is of 40 years, extendable by additional 20 years through international competitive bidding process, with GMR airports having an ROFR of 10%. I would also want to share a positive development on our unsolicited proposal submitted on March 2018 for decongestion and comprehensive capacity enhancement at Ninoy Aquino International Airport in Manila. Manila International Airport Authority, the project implementing agency, has granted GMR Megabyte Consortium original proponent status for developing the Ninoy Aquino International Airport. The platform is well positioned to capitalize on evident growth opportunities to further privatization of airports in India and other regions. In India, there are a lot of opportunities on the anvil. The government of India has cleared 6 projects for bidding: Bhubaneswar, Indore, Varanasi, Amritsar, Raipur, and Trichy. For Chennai's second airport, RFP consultants have been released. Internationally, also opportunities are on the rise. As a matter of fact, this COVID condition will accelerate a lot of privatization of airports across the world. The presentation with all the financial numbers are already with you, and I look forward to highlight and respond to them during the Q&A session. At this juncture, I would like to open the forum for the Q&A session. I have my colleagues, both from the corporate and from the businesses, who would be more than willing to answer your specific questions. I just urge you that we keep the questions at a high level, and any micro balance sheet or P&L specific questions can be taken offline with our IR team, with Anuj Jain and his team members. Thank you so much.
Thank you. We will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Atul Tiwari from Citigroup. Please go ahead.
Yes, thanks a lot. So my first question is on this earn-out mechanism. So how does it exactly work? So this 5,500 crore rupees of earn-out, so that money comes to GMR Infrastructure as cash if you hit those milestones, or your stake in the GMR airport goes up. And if it is the stake going up, then if assuming you are able to earn all of this earn-out, what can be the maximum stake? And what are these some of the milestones? What kind of milestones are we talking about? What do they exactly relate to in the system? Hello. Hello. Can you hear me?
Yes, sir, we can.
Okay.
Well, members of the management, we have the question online.
Hello. Can you hear us?
So we can hear you now.
Okay. So, from an earn-out perspective, I think in the first closing that we had with ADP, the earn-out amount was about 4,500. It was basically achievement of certain milestones related to real estate development, related to certain regulatory announcements and interpretations, where there were differences, and hence there was a delta in the valuation side which between the two parties we had agreed. It is structured, at least the first one is structured in a manner in which we will get additional equity in the platform, which is GAL. So currently we are 51%. If we achieve all the earnouts amounting to about 4,500 odd crores, which were agreed in the first ADP closing, our equity will increase from 51 to about 58%. That's number one. We of course always have the opportunity to monetize that additional 7% and bring ourselves down to 51% if we choose to. The second earnout which has been agreed in the second closing is primarily linked to achieving certain EBITDA numbers, which are EBITDA numbers for fiscal year 22, 23 and 24. Those are specific EBITDA thresholds that we had agreed with ADP. And any percentage of achievement of the EBITDA for that fiscal year, the same proportion of cash will get released for GMR. So it's in the second earnout, it's primarily cash that we will get receive because that was the understanding. Whereas in the first one we will get equity. That's the broad difference between the two.
Okay. And sir, for the first round, so you said that it's a combination of real estate and regulatory announcement. So any rough idea how much of that does that relate to the regulatory announcement? Asking because see the real estate obviously is under your control, but the regulatory announcement, is not under the control of the company strictly. So any rough bifurcation, how much does it relate to operational/real estate development, and how much is the regulatory announcement?
So if I remember correctly, there are about 7-8 different triggers. I won't be able to give you very accurate, but I would say about 40% would be regulatory related, 40% and 60% would be business related. That's how I would put it.
Okay. And so my final one is after the second round of money came in July, how at the GMR standalone level, how much is the gross debt and net debt currently?
Hello?
Yeah. So sir, my second question is after the second round of money came in, how much is the gross and net debt at the parent company level, GMR Infrastructure standalone?
You're talking about the corporate debt?
Yes, corporate debt.
So if I go to the presentation to give you exact number, you're talking about when, as on March 31st, or you're talking about currently?
Currently, after the money was received for the second tranche of ADP.
So I don't have readily available the numbers for the let's say June 30th because our preparation for the call was actually for the March 31st. But I can Amit, would you have the numbers for the June 30th?
The June numbers we don't have. We are not disclosing right now.
Okay,
sir. No worries, sir. I will take it.
Yeah.
Thank you.
So broadly, just to again highlight all the cash that we are getting. So whether it's 4,500 crores and in the second tranche, 1,000 of course will go to GAL, but the 3,500 crores coming in the second tranche will again go for debt reduction only. So there is no other debt reduction and debt servicing. So obviously there's accrued interest also associated with it. That is where the primary purpose of monetization of this investment in the GAL platform. So numbers. We have the 31st March numbers. You can broadly deduct 3.5 from the corporate side of it.
Okay, sir. Thank you. Thanks.
Thank you. We take the next question from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Hello. Good morning, sir. Sir, I have two questions primarily. The first one is on the debt numbers. So the debt from Q3 FY20 to Q4 FY20 hasn't seen a substantial reduction despite having got the Group A ADP's first tranche of investment. So can you please throw light on the same?
Your question was not very clear. You've not seen a substantial reduction, that's what you're saying?
Yes, sir. Substantial reduction from Q3 to Q4 FY20. Q3 FY20, the gross debt was 322 billion. And by the end of Q4, it was 321 billion as per the presentation.
Yeah. So, the monies that were received from Group ADP for the first tranche, that was broadly about 5,250 odd crores. And from that, if I were to take out the purchase of PE, which was not debt, but it was the private equity people, that was about 250 crores. And the balance was again primarily used to pay off the debt, which was there as on 1st of January. The numbers that went up slightly is because we took fresh loan also subsequent to the closing of the first ADP transaction. So we were again back into the mode of crisis, and in order to shield ourselves and keep ourselves secure, we secured additional debt, which eventually actually got paid down in the second closing. So it was kind of a bridge loan to the second closing, and that's why if you were to look from third quarter to the fourth quarter closing, you will not see a big number. But when you see the closing that is coming on June 30th, that will see some reconciliation of that number. Last but not the least, this also does not, your numbers does not include some of the intra-group payables. So, the cash was utilized. So when GAL stopped being 100% consolidated entity into GIL, and at the time of the first closing, certain intra-group payables were also settled. So that will be a small difference which you will see when you see the reconciled numbers there.
Okay, understood, sir. So my second question is on given the fact there is COVID, is there any rethink on the capital expenditure and timeline of the Delhi Airport and Hyderabad Airport? And has there been any discussion with the regulator on the same?
So I'll give this question to VRK Babu. I want to answer.
If I understand the question is you are talking about the leasing?
No, I'm talking about Delhi Airport expansion program and Hyderabad Airport expansion program. Given that there is COVID, given that the passenger demand is quite low right now, is there a rethink on the capital expenditure timeline from on the Delhi Airport and the Hyderabad Airport? And has there been any discussion with the regulator?
No, I think we have not discussed anything with the regulator because we are not foreseeing any maximum delay. There is not much delay except the COVID period of 6 to 9 months. Other than that, we are not expecting any delay in completing the project. At the same time, if you look at the dial, CP3 has already been released by the regulator. He has already acknowledged the expansion of the dial, and he has given the time up to March 2023. So he has already recognized it.
Okay. So last question is, what is the kind of capex required in Bhogapuram and the international airport which you won in the recent quarter? And what are the timelines?
Bhogapuram Airport, the concession agreement is yet to be signed. The dates are being worked out. So we will have 6 months time from the date of signing for financial closure. Thereafter, within 3 years, we have to complete. Even if you expect by March the financial closure is completed 21, that means by 24 we are supposed to complete. The project cost is under finalization.
What is the Nino Aquino International Airport?
Sorry?
What about the Malina International Airport?
Malina International Airport is not of I think what Saurabh has explained is that Philippines is a proponent. It has to pass through so many levels. It is only a just proponent.
Understood, sir. Thank you, sir. Thank you. It's very early stage right now. Understood. Thank you. Thank you, and best of luck, sir. Thank you.
Thank you. We take the next question from the line of Aditya Mongia from Chorus Securities. Please go ahead.
Hi everyone, and thanks for the opportunity. Am I audible to you?
Yes.
Yes, you are, so please go ahead.
Thank you. The first question that I had was if you could give some sense, on passengers and how they have fared with pre-COVID levels. Could you give some sense of non-aero, the way it would have fared in a similar way? What I'm essentially trying to get kind of see through is while the number of passengers coming today are small, what are the kind of spending trends that you are seeing?
In the spending level, the passenger as of today, already, if you really convert into numbers, today Delhi airport is we are seeing almost around 38 to 40,000 passengers per day. And Hyderabad is looking at 12 to 15,000. It is ranging. The spending, we are not seeing much change. But the only thing is the people who are actually spenders are continuing to spend. Actually, there is a jump actually in spending by the people. But the penetration is not that much, and we are just looking at it, how to increase the penetration.
Okay, so your line was not very clear, but what you said was that the spending is similar, but the penetration is not as good as it was earlier.
Yes, that's correct. Penetration, the people who are earlier spending, actually they are spending much more than that. Actually, we are seeing the ticket value higher. The only thing is penetration. We are just looking at it, how to make penetration more. I think we are making all efforts to ensure that social distancing is maintained and all the precautions are available so that the comfort level goes up to the passengers and they will start. Today, they have a more facility available for spending at airports rather than in markets where you have to go into the malls. I think this is a better area, and we have seen a very good, especially in case of the Delhi airport, and Hyderabad is also picking up much faster.
So, sir, the second question which I had was, there is a thought process that airports may eventually benefit in terms of passengers who otherwise thought it was fine to travel by rail, now think it is safer to travel by air. What I'm essentially trying to kind of get from you is, what needs to be done to accelerate this process from, let's say, airlines and airports, and you may be working in tandem on that. And B, in terms of non-aero, do you see any meaningful changes in our strategy going forward, given that there may be more passengers with, let's say, limited ability to spend versus earlier?
I think these are more of general questions, but with regard to the passengers, especially how to increase, and especially people traveling by train going to the air travel, we are observing that there is a good growth of number of people. The only thing we now, because of the various lockdown at different states, Chennai, Bangalore, in Mumbai, and Kolkata, that is where the passengers are finding it difficult to travel. That's why the routing is happening. What we are expecting is once these lockdowns go away, the passenger traffic will bounce back much faster than what we are expecting. Because as you rightly pointed out, people traveling by train are mostly preferring to go by air. We are already observing the profile of the passenger. Regarding the spend, of course, we are just looking at it, how to increase the point. I think we will not able to give much guidance on that as of now.
So, sir, the last question that I had was on the corporate debt. So I'm just talking about the net debt number and the corporate debt implied by the pie that you shared. From 3Q to 4Q, it appears as if the decline has been a modest 2,500 crores. What was 9,000 crore debt at the end of 3Q, corporate debt, including PE exit,
has become 6,600. However, the payment that you received was much larger. So I'm just trying to get a sense of how to kind of take this in, how to see through why the declining debt on the corporate level is lower and much lower than the payout that happened.
Well, hello.
Yeah, you're audible. Please.
So as I alluded earlier, there was a component of intra-group debt also in that corporate debt, okay, which apparently because of consolidation was not, fully visible. So what we received from Group ADP was a number which is about 5,250 crores. Out of that, about 3,600 odd crores was used to pay down the debt immediately, because that was the debt in the legal entity called GISL. Okay, and there was a purchase of PE of about 1,250 odd crores. So if you were to total this, you'll come to about 3,600 and 1,250 would take you to about 4,850, right? Another about 400 odd crores was the accrued interest and other transaction expenses and things like that. And the balance number is what GISL actually also paid down the group entities, because of the transaction in which GISL was going to become a Group ADP entity. That's how the primary money came in. So that is a delta number which is there, which is where you are finding that gap. So what I would request is maybe Amit can give you offline a detailed breakup as to why that number has not come off. Last but not the least, we of course again took some debt, as I said to you earlier, to shore up our cash and ensure that we see through this COVID crisis till we have the second closing done. So that was additional debt that was taken just after the closing of the ADP transaction.
Sure, sir. That clarifies partly. I'll get the rest from Amit. Thank you, sir. Those are my questions.
Yeah.
Thank you. We take the next question from the line of Ashish Shah from Centrum Broking. Please go ahead. Mr. Ashish Shah,
Yeah.
sorry to interrupt. Your audio is not clear, sir.
Okay. Any better now? Hello?
Yes, sir.
Is it better?
Yes, please go ahead.
Okay. So my first question is on, any deferments that we might have given to the airlines. I mean, what we understand is that, probably the airlines are not able to pay the charges for the operations. So if you can throw some light on what are the kind of deferments and the terms, and when are we expecting those deferments to unwind? And second, linked to this, is there any possibility or any thought in the government to also give us a deferment on our revenue share, which can help us have better liquidity in these difficult times?
Deferment to the airlines we have not given, neither in Delhi nor Hyderabad. All the airlines are paying their due, like landing, parking, and passenger fee. There was no directive from the government, nor though there was some request from the airlines, but they are continuously paying. We do not have any issue. Air India is only some delays are there, but which they are continuously paying. Regarding possibility of getting the deferment of the annual fee payable by the time, we have made a request and they have asked for the board resolution which we have given. We have not yet heard, but MIAL has already got for a period of 3 months. So we are also expecting to get for a period of 3 months of the deferment of payment of the annual fee. That is as per the DIAL is concerned. In case of the HAL, the payment of the revenue share of 2% which is payable to MOCA, we have already got 4 months extension of time up to 31st October.
Okay. And just the last one on the Kamalanga sale. So now that it has been sort of called off at this moment, any thoughts on when do we expect to have another transaction in place, or at this moment we don't think it will be feasible to go ahead with that sale process?
Well, I think purely why the transaction has not happened reflects in the corporate communication itself. In the COVID conditions, everybody wants to be a little conservative on the growth and have a conservative balance sheet. So we are obviously open to all possibilities, and including the possibility of post our demerger exercise, as and when it is approved by the board, can we look at doing something else strategically? So those are possibilities which are there. From operating perspective, plants are doing much better than what they were earlier. And as the government continues to bring reform in the sector, as money starts to flow from the discoms, the business will only become healthier. So while it is still a non-core business for us, but purely from drag that it used to have on our balance sheet and on our P&L, that gets mitigated, and we will still continue to look for opportunities of different listed entity through a demerger process, or getting a strategic player, or selling off those assets. Those are something which we continue to look at, but nothing in any defined timeline. So I don't want to raise any expectations. It's still non-core, but that's where it is.
Sure. Thank you very much.
Thank you. We take the next question from the line of Atul Tiwari from Citigroup. Please go ahead.
Hello. Yeah, sir, thanks again for taking the question. So, sir, wanted to understand the impact of current reduced passenger volumes in the airport. So is it fair to assume, and is the regulatory situation clear, that the current under-recoveries that the airports are doing in Delhi and Hyderabad on account of the aero revenue, that regulator will compensate for when the next round of tariff setting happens? Or is it still an open question? Because in some of the other sectors like power, we have seen government asking the companies working on regulatory mechanism to give discounts to the customer. So that is one. And the second one is on Hyderabad. So after the new tariffs kicked in, any rough idea, what is the impact on per passenger yield currently? So the number of passengers is down, but in terms of the per passenger yield, how much is the difference versus the earlier tariff?
And when it comes to the tariffs, I think the airports are different from the energy sector. In case of the airports, as of now, it is basically a target revenue or a control period, and that is divided by the number of passengers to get yield per passenger. Right now, Delhi is operating on base airport charge, which are provided on the concession agreement, and the third control period tariff determination is under the progress. Regulator has already asked us what are their views. They have asked for the views of all the stakeholders, how the traffic and the ATMs are going to span out for the next 3-4 years. Based on that, the tariffs are required to go up, or there is no option. But the only thing is maybe a timeline they may give little more breather to the airlines, which we are not aware as of today. But our target revenue is a basis, and yield per passenger remains same. That will go up if the traffic comes down. That is the fundamental principle. It is not changed. As far as Hyderabad is concerned, we have implemented the second control period tariff on 1st April 2021. As per the if you see the tariff order, the yield per passenger has been mentioned at 209 rupees per passenger, excluding CGF. So because of the fall in the number of passengers, our revenues keep coming down, but this amount of the shortfall, if any, will be proved up in the third control period, which we are expecting on 1st April 2021 on. For that, the necessary application is just filed before the regulator.
Okay, so sir, on this Hyderabad one, you said from the 1st April, roughly the yield per passenger is about 209. And how much was it previously?
Yeah.
I mean, from what level it has come down to 209?
430, it has come down by half. And we come down because the regulator said there was some recovery. Therefore, we have agreed upon for this. And this tariffs are valid only for 1 year up to March 2021. In the meantime, as I explained, the third control period application has already been filed for the regulator in the last Friday.
Okay. Yeah.
For the period.
Thank you. We take the next question from the line of Sarita from Ladkar Securities. Please go ahead. Sarita from Ladkar Securities, your line is unmuted. Please go ahead, ma'am, with your question. As there's no response from the current participant, we take the next question from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yeah, thanks for the opportunity once again, sir. My first question is that does the over-recovery in Delhi airport for the second control period, of course, I understand that this will be limited by base charges in the third control period. Does this over-recovery get carried over to the fourth control period too, to determine the tariff?
No, you are talking about the excess recovery of the tariffs in second control period. If you look at it, the consultation paper for third control period, they have completely recovered the entire amount. So they have adjusted 57 billion INR, the over recovery, after giving the benefits provided by the CBSAT. It's like return on RLC and equity return and some other returns, which they have already provided, and brought down the amount of excess recovery to 57 billion INR on NPV basis as on 1st April 2019. So entire excess recovery of second control period totally set off. So everything is completed. Coming to third control period, which the consultation paper is out, on which now we are submitting our replies by 31st July. Though they have considered the entire CAPEX program, everything, but they have considered only pre-COVID level traffic and ATMs, which are not valid as of today. That is the reason why the regulator has asked for the views of all stakeholders on the traffic as well as ATM. Based on that, the tariff will be determined. Whereas the target revenue has been finalized, the tariff per passenger will go up because of the traffic is coming down. And though they have mentioned there will be an excess recovery in third control period because of BAC, but because of the pre-COVID level traffic. But considering the post level of traffic, we are not expecting any excess recovery in third control period.
Okay, so I'll take it offline, sir. My second question is of course, we spoke about the demerger of GMR Group in the airport and non-airport business. Is there some kind of timeline or some kind of timeline tentatively you can speak of? This is a timeline you're looking for, like fiscal year end or calendar year end. So, answer what are the steps required, to eventual listing of these businesses?
So at this stage, it's still quite preliminary. We have to first satisfy our committee of the board, which is looking into the matter. Hopefully, I think we should be able to give you a much better guidance in our first quarter, post our first quarter board meeting, when the board will again, the committee of the board will again review what are the possibilities. So at this stage, I won't say that it is for sure. It is not. The completion will not happen within this current fiscal year. It will surely flow into the next fiscal year if we are able to file for the merger, maybe by September, October. But again, these are decisions yet to be taken. So it's a completion probably which will happen in fiscal year 22, not 21. If we were to get the approval from our board.
Yeah. But in case you get the approval, the filing may happen by September, October. Am I right?
No, don't put words into my mouth, my dear friend. What I said is that we have to go back with our analysis and findings to the board, the committee of the board, which will meet, I think, by end of August or early September for the Q1 results. And I would be able to give you a much better guidance and much more accurate guidance then as to when the filing can happen if approved by the board. So that's what I'm trying to do. So even if in the best case scenario, if the board approves and we do file, let's say by end September, October, it is still not a fiscal year 21 completion. It is a fiscal year 22 completion. So that's what I'm trying to highlight.
Understood, sir. Thank you, sir. Thank you.
Thank you. We take the next question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thanks for the second opportunity. The question that I had was just to get a better sense of future prospects and the ability of GMR to be bidding for them. Now, in your opening comments, you did talk about certain projects that we are starting on. Let's say Goa is fairly well starting. Then there are two other projects that you highlighted, Bhogapuram and Mandalam. Now, for the opportunities to add more assets, could you give some sense of where the funding can come from? And it will be useful if you could highlight in some ways what Group ADB thinks about supporting the JV in terms of funding.
So let me answer your second question first. Group ADP is very supportive of all the initiatives and growth initiatives, whether it is in India or it is in Asia. And that's where our focus is currently. Having said that, if you look at Group ADP, they are also quite conservative from their financial from the leverage and their outlook. So whilst they fully support on the growth, I'm sure they will take a considered decision as and when opportunities arise. So it's a combination, honestly speaking, between a very entrepreneurial entity called GMR versus a very process-oriented entity called Group ADP. And hopefully, I think we will have the right marriage to take forward any new initiatives. Secondly, any of these initiatives that we are talking about, even if you look at Bhogapuram, I mean, it's investments which are very minuscule as of now, will of course scale up, but they will scale up over the next 2 to 3 odd years. The same way, any new opportunities of the new airports that are coming, obviously we will have a close look at them. We are interested and we have the ability to find capital for investment in those entities, including getting investors also within the airport vehicle. So it's not that GAL, which is the airport platform now, should own 100% of equity in that particular airport. GAL may own maybe 75% of the equity, and 25% of the equity can come from other long-term investors, sovereign funds and pension funds who desire to be in this particular space. So there are various ways and means which we can source to play this opportunity. And but again, it's a little early stage right now. Let's see what the opportunity is, what kind of investments it will require, and whether it makes sense or not. I mean, that's the first step that we will have to sit down with Group ADP and see, okay, does this investment make sense or not? Last but not the least, let me again highlight one aspect which sometimes has got missed out in the past, is that our focus now is to create actually free cash for equity in as short period as time for any new project. So obviously there will be a time of investment, but there's also a time of reaping. The focus has to be on that because that is what flows to the equity holders. And Group ADP is very focused on that, and so is GMR. So, we will be taking those calls as we go forward. But at this stage, for me to give you sources of capital would be a little too premature.
Okay. The second question which I had was, this is a related question only. In terms of our existing investments, which is Hyderabad and Delhi, is the thought process of aggregating more stake at an asset level, or would you want to highlight some ways in which you can monetize the stake that the GMR Airport has in these two entities?
You're asking whether GMR would like to monetize or what? I mean, I didn't even, because the decision now is not only of GMR, it is now GMR ADP.
Right. So the question was simply put that I get that there are two parties to this decision, but what I'm trying to essentially assess is, would you want to increase the stake in the asset that you have, which is Delhi and Hyderabad, or would you want to think through monetizing it in some way?
So we are comfortable with whatever stake we have right now in both the entities. We are not looking at any further monetization in these mature assets, at least in the near term. Let me put it this way. Once it matures further after the expansion, and we get a good valuation for some monetization on these two assets, which allows us to take that capital of a mature asset and put into a development asset, that's a call that we will take at the right point of time. But at this stage, these assets are still in an expansion mode, and true value of these assets is still yet to be realized. So we're not looking at any monetization of or part monetization of our investment in these two assets.
Sure, sir. Just one question more from my side. It will just help me assess the funding situation slightly better. Given where things are at this point of time, assuming nothing else changes, whatever projects that you have in hand, this includes Manila, this includes Goa, obviously, this includes Bhogapuram. Would you require any loan coming from, let's say, equity-like loan coming from Group ADB to fulfill your commitment?
Coming into those SPVs you're talking about, or coming to GAL? Because they are two very different things.
I am assuming that there will be some kind of equity support any which way is coming from Group ADP for these ventures now that they are an equity partner. Beyond that, do you need any other support coming from Group ADP for funding the equity portion of these assets? Your side of it. So the question is simple: does GAL generate enough cash flows to take care of its equity commitment after the 1,000 crores that has come?
So 1,000 crores is equity which has come to create actually capacity for further investment in whether it is Goa or equity investment into Goa or Bhogapuram, right? So that is where it is truly coming. GAL has again capacity to lever it up if it wants to, but like I said earlier, in our thought process and Group ADP's thought process, this stage we would prefer, if required, is that within those entities, if I want to monetize, let's say 25% of Goa and get some equity over there through getting a sovereign pension fund player in that place, or in Bhogapuram, that would be a path to follow. Both the partners are interested to put actually money directly also into the airport assets. So whether it's Group ADP or GMR at the right point of time, they are also interested in putting the money into those assets in a direct fashion. But at this stage, the most probable path, if equity is required, would be coming from either the sovereigns or private equity funds, or to come and have a direct play in that airport asset. That's what we think, and this correlates also to your earlier question that do you need to monetize, further equity in Dial and Hile, which I said to you that at this stage we're not looking at because we don't require that money. But let's say there is 6 airports which come into play and some do require. Then we will get a private player to come and play directly into the asset play while we continue to control significant majority of equity of that airport SPV.
Sure, sir. Just one last clarification. You said that 51% stake which you have in Airports Limited, GAL, can go to 58%, and you have the ability to monetize the stake that you add up. Does Group ADB have a right of first refusal, or can you sell it to any other party if you want to? The additional stake that comes your way, if it comes your way.
So there is no ROFR kind of a thing. But yes, in order to find the right value, you will have to open up a dialogue and see where the best. We don't want to go